Hello, everyone, and welcome to Market Talks. I'm Ray, head of markets here at Cointelegraph. In this show, we discuss the latest in what's shaping the markets with valuable insights from industry leaders, traders, and influencers. Our guest today is Justin Bram, co founder and CEO at Astaria, a platform which allows users to put up their NFTs as collateral to turn and earn them into instant liquidity. Here's a short video intro about Justin. Howdy, Justin. How's it going?
I'm doing really well, and with that snappy intro, I'm doing even better. I don't think I've ever had such a professional introduction, so I'll have to get that clip from you.
By all means, thanks for that. Usually I do two or three pre-reads before the show so I don't stumble and stutter over it. So today was a rare success.
It was great. Thank you.
So how are you doing? How's life as a founder? What do you have planned for this day?
For this day, I've got a bunch of calls. We're interviewing for another front end developer and then also a project manager. So going through that process, also just tracking the cryptoverse. There's obviously always something crazy going on. So refreshing my Twitter feed endlessly and following up with the news.
Yeah, you almost need a personal assistant just to keep up with Twitter itself and then charting and then reading roadmaps and the docs on all the different projects that are out, trying to keep a pulse on the early alpha, to like basically pin down value accrual narratives for different DeFi projects. They're all 24-hour jobs, aren't they?
They are, yeah. Every at the company, I always joke like, if we get product market fit, we can do so many other things. So maybe that's a product market fit role. Once we have product market fit, we can have someone for the team that's, synthesizing this information and dwindling it down for us into like a very condensed format. Because we have a company Slack, and crypto's crazy. So there's always someone talking about something crazy that's been happening in the markets. I
Yeah,
think
yeah. There's always
the mo yeah, I think the most recent news that I'm sure you've seen that's interesting is that on all updated Macs, the Bitcoin white paper is like hidden somewhere in the Mac operating system, which is fun.
yeah. That's awesome. What do you know about that? Is that like a recent development, or that's something that's just been embedded there for years and someone just found it?
I think I saw that this is going back to 2021, but I'm not too sure. There's some, it's just a news story. It's all over Twitter. I don't have too much information, but I verified that it's true. So if you search it on Twitter, you'll find the process of how you can find the Bitcoin white paper already loaded on your Mac, which is pretty interesting. It's fun. There's some rogue developer just playing around out there.
Yeah, that's awesome. I wonder if Apple will track him down and fire him or say that he
I would
violated
imagine.
your NDA or something.
Yeah, that would be my guess.
Even though I think it's cool. It makes me love my MacBook Pro just a little bit more. So,
Me too.
as a Bitcoiner, in your opinion, what's the absolute most exciting thing that's happening in DeFi right now?
We're still seeing some really innovative applications being built. So I have a project in the NFT space, as you mentioned. It's called Astaria. It's an NFT lending project. And one of the things we're really focused on is over the next 3 years, what NFTs will mean. And we think, at least I should say, I think that NFTs will go well beyond just art. And I think we're just seeing a little glimmer of that now. So Uniswap V3 positions, for example, are NFTs. Most people don't think of them as NFTs because they're not art in the traditional sense, but they are. We also have the Liquidity project, which is a stablecoin project. They have their Chicken Bonds product, which is an NFT. And I think we're going to see more and more DeFi head to the NFT space because the way to compete in the financial world is not to have a fungible position in the market; it's to have a non-fungible position, right? It's to take a unique opinion on something. So that's what I'm most interested in is where NFTs are going beyond art. And if you do just a little brainstorming, you can kind of think of some really cool use cases. So one example is tokenizing your own customized ETH validator. If there were a way to securely do that, you could imagine, if you wrote a really compelling MEV bot to run on your validator, you could now, have a very profitable validator and then let's say borrow against it on Astaria or any other NFT lending platform. or you could potentially sell off some rights to that. So I think we're going to see like more and more financial assets be represented as NFTs, and of course, we're obviously excited about real world assets coming on chain. Although certainly that's a couple years away, but I know of a few projects working on that that I'm really excited about.
Right. So it sounds like a portion of your interest kind of revolves around giving liquidity to NFTs. Can you speak a little bit more about that?
Yeah, I think in some ways that's sort of the innovation in crypto is like liquidity all the time, anywhere, and everyone has access to it. That's sort of what Bitcoin is, right? It's a market that never stops, that anyone can access, that anyone can transact with, and it's, very censorship resistant. So I think if we like go down that road and expand on that thesis a bit, as we think about more real world assets and bring other assets on chain, people want this instant liquidity. I remember seeing a really interesting tweet thread. I'm not sure if you saw it, but it was sort of like hypothesizing where we could be in 5 or 10 years if the regulation is done properly and if we keep building. And in the bull market, we're all browsing Zillow, right? And we're all looking in our neighborhood, seeing what condos there are,
Mhm.
houses or apartments. But imagine if you could just set out like a stink bid or like a floor bid offer to like a new renovated one bed in, the zip code of your choosing. And you could just have it sit there for a year. And the owner of that house now could get instant liquidity. And because there's a few bids at a certain price, maybe they could borrow a little bit against the value of that property and they don't have to take out a full mortgage or go through that process. They could get a $10,000 mortgage off their house as opposed to, using a credit card, which is, a very high interest rate, or doing like some sort of payday loan process.
Yeah, and of course, there's a need for regulation to kind of connect that tangible and
Yeah.
intangible. The intangible being like code, right, in a way, and the tangible being money in a bank, in a real bank.
Yeah.
In the United States, I find the thing that I did love about DeFi was um, one was able to like self bank, right? And collateralize your own assets and go direct to market without any hoops, without any paperwork, without any sort of strange like criteria for your credit worthiness to borrow against your own funds. And that was really, really convenient and empowering. So I agree with you. We do need some sort of regulatory framework that just allows for that money flow in and out of crypto in a way that's transparent and protects investors, I guess.
I totally agree. And hopefully, there's so many projects working on chain credit scores or like credit scoring mechanics. And I hope that becomes a thing because, in like the real world, credit is so important. Obviously, there's critiques about how credit is scored in the US today, and it's probably not a perfect system. So hopefully we can build, the future of that on chain, which would be exciting. And I agree with you. I'm still hopeful that we get proper regulation in the US. I think with other countries competing in this space and like actually developing good frameworks, I think that puts a lot more pressure on US regulators to do the same. And we can follow as opposed to lead.
Yeah, one hopes. So going back to NFTs and liquidity, what does Astaria do exactly? And is it any different from NFT Perp and Parsec? For the audience, NFT Perp is a platform where you can basically load up your NFTs and use them as collateral, I believe, or also use a perpetual contract to speculate and trade on NFTs. So if I wanted to buy like a Bored Ape Yacht Club NFT, and let's say they're trading for like 60 ETH. I don't have 60 ETH that I am willing to spend or able to spend on one of those NFTs. But I have like 5 ETH, right? And I'm familiar with the price range of like a BAYC NFT. Maybe it gravitates between 60 and 70 ETH per NFT on a monthly basis, and I'd love to play that range. NFT perp allows me to like buy a synthetic position in that NFT and kind of play that price spread and take the profits on it. And feel free to correct me if I got any of that wrong. But how does Astaria differ from other NFT platforms that are out there right now?
Yeah, it's a great question. I'm a huge fan of NFT Perp. I'm actually an investor in their newest round. As far as I know, they don't let you collateralize your NFT. It's strictly a perpetuals product. So everything else you said aligned with how I view NFT Perp. But yeah, you basically can speculate on price without owning the NFT, and you can get leverage, which obviously is very convenient for traders. Astaria is a very different product and would be more comparable if your listeners are familiar with products like NFTFi or maybe BendDAO or Paraspace. Those are, I would say, the three biggest leaders in the space today. NFTFi was the first, and they sort of coined the idea for a peer to peer market, meaning the way you get a loan is more of like a bid and ask process. So let's say you had a CryptoPunk, you would have to put it on the platform. You would have to request loan offers. You would basically like sign a message to request offers. Then I could come in and give you an offer. Someone else could give you an offer. Maybe you don't like the offer, so you go in the Discord and their Discord and try to renegotiate something else. And then once you and a lender agree to terms, you sort of agree to it. And your loan is fixed rate and fixed duration, and you don't get liquidated unless you pay your debt back. So your NFT is uniquely valued, and you're not just going off a floor price. But the downside is you have this like bid and ask process, which is a little cumbersome and not as competitive as I'd like to see. The other side of the market, you have your peer to pool options like BendDAO, Paraspace, JPEG is another one. What they basically do is they look at the floor price of a collection. Maybe they're going off the new Chainlink oracles for floor prices for like Bored Apes, CryptoPunks, top 10s, top 20s. And they're basically allowing every punk or ape in that collection to borrow at the same loan to value ratio as any floor piece. So it doesn't really matter if you have a rare piece, a floor piece, something in the middle, you're always going to be able to borrow at the same rate. And this is advantageous because it means you get instant liquidity. So you can easily borrow, you don't have to think about it, and anyone can lend to you, and it's just a big pool you lend to. But the downside is you're sort of losing the purpose and the like beauty of the NFT itself, right? You're not actually respecting the non fungible nature. So both of these models have a trade off, and they both do work well. They have a lot of traction today. There's about $3 million of new NFT loan volume each day, which is awesome. These projects have really pioneered the space. But we took quite a bit of a different approach, more of like a hybrid. So we're similar, but we add a third party that we call the strategist. And the strategist basically acts as an oracle. And they're your projects like a strategist would be someone like Upshot, Deep NFT Value, Spiciest, Spice Finance. There's about 12 or so appraisal companies in this space. And what they do is they build models to basically accurately price a given NFT in a collection. And they do this for hundreds and hundreds of thousands of NFTs. And so in our system, a strategist, which are these like professional appraisers, or of course, anyone could be a strategist and try to compete. These folks basically spin up a ton of strategies for hundreds of thousands, or actually, we've seen millions of NFTs. Those get Merkleized, and then anyone can borrow against the value that the strategist sets. So we get the benefit of like uniquely valuing a given NFT, but also the convenience and instant liquidity of a peer-to-pool model. So we see it as more of a hybrid and a differentiator, and we're going to be launching the beta in the next couple of weeks.
So going back to DeFi, I feel like Arbitrum was a steroid shot. Like if you've got an infection that you can't shake, or you've got pneumonia or something, you might go get like a cortisol shot or a steroid shot, and it gets you all amped up and strong. And yeah, it makes you fat eventually, but it helps you get over that infection, right? And DeFi was having some liquidity issues. Retail investors were wrecked. Whales have gotten wrecked because like all the liquidity got sucked out of the entire crypto market thanks to FTX implosion, Binance drama, Lunaterra, blah blah blah. It's just like FUD, 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 and you just see TVL across the market just go down, 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 and then here comes Arbitrum with this massive liquidity injection that falls on DAOs, that falls on whales, that falls on retail. I mean, like I was so happy to see it. It was well needed. We waited a long time for it, right? That's wonderful. So I feel like it supercharged all of DeFi, and all the airdrop farming and speculation is back now. But I want your take on this. Are you more bullish on ETH L2s like Arbitrum and the development we see happening there? Or are there other chains that you're finding a little bit more interesting right now?
Yeah, I mean, so I have a huge bias because I'm building on Ethereum and it's sort of where I first got started and where I've seen the most development. And I've also only been to Ethereum conferences. I find them to be, I don't know, I've never been to another uh, chains conference, but the Ethereum conferences, in my view, seem like the gold standard of conferences. So my whole world and ecosystem is in the Ethereum world. So I have a bias towards Ethereum. And frankly, I only use EVM chains and mostly they're Ethereum layer twos. But yeah, I'm much more bullish on the Ethereum ecosystem than other chains, mainly because in my view, that's where the developers are and that's where all the innovation starts. So I can't I mean it's very possible I'm missing something, but I haven't seen any innovative DeFi projects or NFT projects start on another chain. There's certainly been forks or ports, but in my view, all of the innovation is happening on Ethereum. And to me, that makes sense because if you're fundraising for a project, if you're bootstrapping a project, you want to be where the liquidity is, you want to be where the other projects are, you want to be in the right ecosystem. And I think Ethereum has a really big moat there. I will caveat that with saying I am hesitant about the Ethereum scaling roadmap, right? So, like having all of these different layer twos, whether they're optimistic rollups or they're ZK rollups, it doesn't really. I mean, that's amazing tech. It's all very exciting, but you have a ton of fragmented liquidity, right? And it seems like with the scaling trilemma, you have to sort of scale um, with these layer twos and like potentially layer threes in the future. But to me, the downsides of that are pretty significant, right? Unless we can obfuscate the UX from the user, having your average user switch what chain they're on, bridge funds over, it's not really going to be a sustainable solution. So I think like one of two things need to happen. Either one, it has to be done in a monolithic way, which is like how Solana's doing it, which clearly they're having issues and who knows if their tech is there yet. Or the other way, which I think is most likely, would be to, like I said, obfuscate all of this from the user. So I think in the future the user like won't know, hopefully won't even have to know what chain they're on. It's all sort of handled for them in the back end. And if they go to an application's front end like Uniswap, Uniswap has a way to like manage what address they're connected, excuse me, what chain they're connected to, how they're swapping, or it can aggregate liquidity in such a way that the user doesn't have to worry about it. Because in my view, like having funds in Optimism, Arbitrum, trying to find where the best liquidity is, trying to find where the best NFT that you like is. For most people, that's just not going to cut it. They just want something that works. We're just so early where there's such a small segment, such a small cohort of DeFi users in general that it's fine because we're experienced. But um, in the future, I think it just has to be much more of a simple process, just like browsing the web is today.
I'm glad you mentioned that because maybe we are early, but I've been in crypto more than 6 years, and just last night,
Wow.
I needed to move some funds off of a ledger and, send them to KuCoin to get AVAX because it's easier than doing, like, all the bridging, right? So then go to AVAX to get Avalanche and then leave wait, no, no, no. Go to KuCoin to get Avalanche, the AVAX token, and then send that over to, MetaMask, and then what was I doing? And then go to Trader Joe and search for Pendle and unstake Joe token from Avalanche, where it was SJO, and then hit another bridge, which takes 10 minutes. Mind you, it's already like 12 a.m. Luckily, the Lakers were playing, so I was watching that. But then you got to move, like, you got to move SJO, unstake it, and move it out of Avalanche over to Arbitrum to then put it in another pool. Why does that take an hour? I mean, maybe I'm slow, maybe there's a better way to do it, but I agree with you. You definitely have to obfuscate all that back end transfer trash and all that rigmarole and process and make it to where I just like press transfer to this liquidity pool and some magic behind the scenes happens and puts it there because you're right. People don't have time to deal with all that. It's super time consuming.
Yeah, I mean, and not only the fact that it's time consuming, it's confusing. And if you didn't have all of this knowledge that you have, you would be like, how do I even go from one chain to another? Do I bridge to a centralized exchange? Do I use the official bridge, which takes like 7 days in Ethereum's L2's case, or do I use like a faster bridge like Stargate or Hop or whatever, or Wormhole? So it's crazy confusing. There's there's no best way to do anything. There's no consensus here, and it's really just a mess. And the possibility for user error is so high, right? Like if you're
Yeah.
imagine you're a first time user and you're an Avalanche, like, okay, so you want to send your Avalanche tokens to Coinbase. Well, like now you have to make sure you've selected the right address on Coinbase because Coinbase might not accept Avalanche tokens. They might only accept Arbitrum, Optimism, and Ethereum mainnet tokens. Like just the possibility for screwing up. I mean, we've all done it, right? Like the traditional fat finger mistake where you add an extra decimal, you put in the wrong address. It's really just a mess. And so hopefully that all of this is obfuscated from the user. And we've seen some promising things. There's the Argent wallet, which is a mobile wallet with social recovery, which looks pretty cool. They've been working for a couple of years on that. I think Apple has patented some designs for their mobile wallet, and they've been like floating or flirting with that idea. Um, so we'll see. But yeah, it's definitely a mess right now, and hopefully that's the sign that we're still early. There's still quite a bit of upside in adoption because if people are using this software right now when it's so confusing, like just imagine when it's as convenient as just using Google Chrome for everyday browsing or signing into Facebook or whatever it may be.
Let's talk about ARB real quick, the actual token. So,
Let's do it.
12% available, right? 12% of the total circulating supply is available right now. Is that right?
That sounds about right. I think the circulating market cap is about a billion, and the fully diluted is maybe 12. I want to say.
And the rest is meant to be locked up for a year to 4 years. And if you look at like Arkham, Nansen, look into Chain or look on Chain, we can see that like Andrew Kang and various addresses which are labeled as being whales and smart money, they keep accumulating ARB, even like when it was $1.07, when it was $1.17, when it was $1.24, it hits $1.45 before they did this silly little, oh, we actually, this is just a ratified blah, 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 that little kerfluffle that happened over the weekend. So ARB hits like $1.45, and not many whales are selling or taking profits at that level. What's going on? Like, is there a thesis for value accrual on Arbitrum token?
I don't think there could be possibly today. I think it's merely speculation on like the memetics of the token and the interest in the chain, and just the idea that the thinking that if we see TVL go up on Arbitrum, like the token's certainly going to be worth more. I think that's how these things are valued today. If you look at Arbitrum sequencer revenue, it's teeny, right? And it's presumably expected to be teeny going forward. The sequencer revenue is basically like what Arbitrum gets to take home from bringing all of this data back on chain, basically the excess funds people are paying to use Arbitrum in aggregate. And this is like a relatively small revenue source. I think to date it's been a few $1 million, which is great and good for them. But like when you're talking about something that's worth, I always go off fully diluted valuations. When you're talking about something that's worth 12 to $15 billion fully diluted, I think you have to have a little bit higher expectations, and I don't really see where that revenue is going to come from. I think the sequencer fees are presumably a race to the bottom, especially when you have other L2s like Optimism competing. And then, like, in the next 2 to 5 years, you have the ZK rollups is really what most people believe is like the next wave of scaling, what scaling will be. So I don't think the sequencer revenue is going to be significant. The governance revenue could be significant because who knows what could happen in the future. When people bought Ethereum or Ether at the start, no one knew that we'd have EIP 1559, that we'd go to proof of stake successfully, and that emissions would be net negative, and that like there's this basically like share buyback mechanic. So the governance could be valuable, but I think mostly it's just speculation of, well, Optimism's this worth this much, so we have to value Arbitrum at this much. And oh wait, also there's Solana and Cosmos, and these chains have actually less activity than the Ethereum L2. So the L2s have to be worth more. But at the end of the day, I think it's mostly just pure speculation. I generally sell my airdrops to Ethereum. Learned a lot of lessons. Obviously, some good sells, some bad sells. But generally, when I get an airdrop, I usually convert it to ETH. That is what I did in this case with Arbitrum, even though I'm a huge fan. I'm a user of Arbitrum. I use it more than any other L2. But I ended up selling my Arbitrum airdrop for ETH, and we'll just continue holding the ETH just because I'm a little more conservative. I think Arbitrum probably has more upside. Um, Certainly, the price is a lot more volatile, and you could have more upward swings. But for me, the volatility of Ethereum will do. So for me, I'm just holding ETH. But yeah, it's been a wild ride, especially with the governance discussions that have been going on over the past couple of days.
So when you look at like Uni token, it kicked back no rewards to holders or stakers. Sushi, very limited kickback to holders or stakers. What's another one? Optimism. All these tokens kind of went on a run price wise. You're saying like the memetics is basically the same. So some traders are looking at, okay, Sushi went to 9, Uni went to 15 or 20, Optimism went to 4. Um, for the same reason, and because there's less circulating supply, we can, this is hypothetical. Some people think ARB is going to go to 2, 3, 4, and maybe 5. Regardless of FDV, that doesn't matter. We're just looking at analogs of what other airdrop tokens did within a certain time frame, circulating supply, uh, open interest, and technical analysis. Do you think that's the only speculation behind that? Is it not possible that maybe ARB launches like a VE model and starts going after curve pool fees, or does it become like a super lucrative asset within DeFi now that Uniswap has their license has expired and ARB becomes like a base pairing that whales are going to extract yield from? Are there no fundamentals to that, to the actual governance token in your view?
So all the things you mentioned are possibilities, and they're exciting possibilities, but they're not. There's nothing we've seen that would indicate that that's true, right? So for me personally, I I just wouldn't feel comfortable speculating on something that's so ungrounded in anything we've seen. So like those are all exciting things, and perhaps they're good reasons to buy the token. But in my view, it's just extremely speculative, just because like there's no evidence to suggest any of those things will come to fruition. Let's say, and the the one thing we do know that will come to fruition is that there's massive unlocks ahead. So it's sort of like you're betting against these massive unlocks, or you're
Mhm.
betting on the speculation that maybe someday someone will think of something that matters and can make the price of this token go up.
Right, 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 right. Now that makes sense.
But like
Um,
people, there's like this idea in poker of like level one poker thinking, level two poker thinking, and level three. And it sounds like the thesis that you're explaining is more buy I would be a buyer not because I think those things are going to happen, but because I think other people think those things are going to happen. And maybe that's a valid reason, right? Even though I don't actually think Arbitrum will, find great value accrual over, let's say, the next 2 years. If other people think that, and other people are willing to buy the token because of it, or they're willing to buy the token because they've seen all these other tokens go up after a small dip in a launch, maybe that is a valid reason to purchase the token. But for me, it's just quite speculative, and I just don't have an edge there personally. I'm not much of a trader myself, so.
Right, right, right. No, I value your perspective. Last question. Next week is huge. April 12th, it's happening. ETH unlocks, Shanghai upgrade, Sharpella, Carpella, all these different upgrades are finally coming to fruition, but this one's big. So, what are your perspectives on the upcoming Shanghai upgrade and the potential of liquid staking derivatives? Is it just a rotational trade? Or does the unlocking of Ethereum represent the offering of some new innovation in the crypto and DeFi space?
Yeah, I'm really torn on this. I could see it going a few different ways. So, in my view, everything in crypto basically is sell the news. There's never been, there's never been an announcement that hasn't been sell the news, right? Like Uniswap V3 launches, and that's the launch is the peak of the price. It doesn't matter the adoption that comes after. When Ethereum merged, this was like the most historic thing ever, right? Transitioning from proof of work to proof of stake, and they did it flawlessly. Sell the news. This is interesting because I would say any catalyst in crypto is basically sell the news. But in my view, this is objectively not a short term bullish catalyst, right? You have supply coming online. Most of it won't be sold, sure. Most of it's already in LSDs, sure. But there is some excess supply that will be sold, right? Like there are people that spun up validators that no longer want to hold ETH, or they need to pay for like their kids' college tuition. Who knows what it is, but there's increased sell pressure. So it's an inherently short-term bearish event, but of course, in the long term, it's obviously incredibly bullish, right? It's going to show that Ethereum is more secure, that we can do upgrades successfully, and that you can stake and now withdraw. So you have some more flexibility there. So I'm torn. Normally, I would say it's sell the news, but I don't think this is, inherently positive news, right? It is long term, but short term, it's at best meaningless. At worst, it's slightly bearish. So I'm a little torn there. I do think for the first few weeks, when we see the withdrawal queue get extremely long, people are going to get scared. So my bias is towards that price will go down in the short term and then up in the long term, just because it's going to look, I would assume, pretty bad for the first few days when people are rushing to withdraw. We know this has to happen because some LSDs are at a discount. So Coinbase's staked Ether is at like a 1.5% discount. Lido staked Ether is at a 0.2% discount. And so we know these LSDs are going to get redeemed because there's an arbitrage there. So we know it's going to be quite significant. So as far as price impact, my hunch is down, but it's not like I'm selling my ETH or trying to trade this. I'm more of just a long-term holder. So uh, do with that information as you will. As far as the LSDs, I don't hold any LSD governance tokens like Lido, Rocket Pool, any of those Stakewise. I personally think the space is going to get very commoditized. So this is the best example is Coinbase right now charges 25% of a fee for their Coinbase staked ETH product. Lido charges 10, and I think Rocket Pool's about 15. Now, in my view, for like the average user, of course, there's benefits to Rocket Pool's decentralization or Lido versus Coinbase, etc. But in my view, for most users that are strictly looking for financial gain, these are really like commoditized services. If you look at the actual analytics here, like they're all basically yielding the same before fees. So like, yes, they're all running MEV Boost or their own like version of MEV Boost. There's maybe 5 to 10 choices that you can run there. They all yield more or less the same, and it all sort of gets smoothed out that it doesn't make a difference. So in my view, this is a commoditized service. Fees have to come down for these LSD products. I don't think 10% is sustainable. Certainly not Coinbase's 25. So I think fees are going to drop down astronomically low, especially as we see more competitors come online, just because the trust assumptions for trusting a new staking service are lower with withdrawals. So I think fees drop. Also, yields are going to drop. So we have 30 something percent of the network staked maybe now, maybe a little less. It's presumably going to get to 60, 70, who knows? Cardano, I think, is at 80% maybe. So there's a lot more stake coming online, and basically that means more ETH has to be paid out, but the yields end up being much lower, right? So you're getting block rewards, like MEV rewards less, MEV fees, and then also with more stake, each validator gets less yield. So I think yields are estimated to drop to could be as low as 1% over the next couple of years. So you're having fees drop for LSD providers, you're having the yields drop. And so ultimately, like I'm personally not necessarily bullish on these LSD tokens, but that said, it's very much a narrative game. And I could see the narrative being that, this was successful. You can now withdraw your ETH and now LSD tokens go up. But for me in the long term, I just don't see a moat there for a good business right now. But that could change.
You've got my brain buzzing. Those are very unique and well thought out perspectives that I hadn't considered. So I'm sure the audience likes that. Maybe you should talk about that in greater depth on your show. I have seen the
Good
discussion
idea.
of yields dropping over time, but I hadn't seen it laid out as in fees from LSD providers need to drop and ETH yield itself over the years expected to drop to 1% and there not being a moat. I hadn't really seen that narrative put out on Twitter that much from all the smart people. So I would love to hear more about that from you through your private channel
Well, I don't
in
know
the
if I fit in
future.
the category of all the smart people, but I will continue to talk about it.
Yeah, no, you're there. You're there. For your protection and mine, allow me to inform the audience that none of this Nothing that Justin has said or that I've said is financial advice. We're not encouraging you to go invest in or buy anything. Trading comes with great risk. You could lose everything all in one go. You could get rugged. You could send your money to the wrong address on the wrong chain, and there's no like tech support for Bitcoin, so you're not getting it back. So, do your own research and be careful out there. This is not financial advice. Um, Justin, anything else you want to tell the world before you go? If you could just tell everybody in crypto something that you think they need to know right now, what would you tell them?
I would say for you can be a little conservative now. Stick to I don't know, stick to Bitcoin and Ethereum. That's what I would personally do, but not financial advice. I personally don't play around in the token sandbox too much anymore. But I would also say, even more importantly, come work in this space. It's a great place to work. Uh, there's still like an incredible amount of VC funding coming in. I see a lot of deals getting done. Valuations are obviously down a bit, but whatever you are, if you're a developer, of course you have endless opportunities. But I'm not a developer. I have a little chip on my shoulder still from not having any technical expertise, but you can still build a career for yourself in this space. So I would say very much explore that as a possibility. If we're right, this industry has a lot of growth ahead, and you want to be in an industry that's growing. And crypto will certainly have another cycle of hype, another cycle of bear markets that will keep going. But it's a great place to be. People are generally very awesome and fun, nice, and it's a global industry. You can travel anywhere for these conferences. You can work anywhere. People are flexible with remote work, so do that. If you're a talented developer or the project manager, reach out to me. We're hiring at Astaria, and I think it's a great place to work. So thank you so much for having me, Ray.
You dropped a lot of alpha on us. I appreciate you coming on. If people want to follow you, where can they find you?
If you just search Justin Bram on YouTube, I'll pop up, and then you can see my Twitter handle just below my name here. It's just Justin C. Bram. So you can find me there.
All right. Thanks for coming on. Audience, you've been listening to Market Talks. We're here every Thursday at 11 Eastern, or maybe it's 12 Eastern. I know we keep changing the time, but I believe it's 12 Eastern. I'll see you guys next Thursday. Thanks for coming on, Justin.
Thanks for having me.
All right. Chat with you later. Bye bye.